Stocks down big for the day. 20-year bonds up pretty good. 1.14%. Gold up almost a percent. We see the S&P 500 down 2.39%. The NASDAQ 100 down 3.27%. What did we tell you? We told you to get ready for things to move down again after things had been popping up a little bit. Why? Because all things being equal, the market always tends to move in the direction of the largest chart, which is the weekly, that is decidedly down. Derivative oscillator gaining downward momentum. Price percent oscillator heading down on that weekly chart on the S&P 500. We go to the 2-day chart. What do we see? Well, it had been heading up, and we see this latest candle is a red spinning top, long wick on the top, wick on the bottom, not as long. Derivative oscillator continuing to lose downward momentum, but that price percent oscillator, our main indicator, moved over and headed down again. And of course, we had at the close of the market on Thursday this latest candle forming. There had been two up candles, green spinning top on the 2-day candle ending on Friday the 28th, and a green up candle, a rather decent size one, on the 31st, Monday the 31st. But what we see from Wednesday and Thursday is, again, some down movement resuming. So we go from the 2-day to the real tell. What happened on the 4-hour chart? Hasn't crossed over going down yet. We haven't jumped in. We're waiting to see how things shake out. Derivative oscillator losing lots of momentum. Price percent oscillator is heading down after heading up over the last few days. It's starting to move over. We'll see how long this down move continues. Again, pretty strong down for the day. But again, following our rules, we wait for SPY to cross over going down on the 4-hour chart. The pullback, or the reverse as we could call it, is underway, and it is apparently, it appears to be right now, moving toward a crossover going down. If that happens, pull the trigger on a practice trade going down. And what would you look to purchase in your practice trade? Something called SH or a similar inverse fund of the S&P 500. ProShares puts that one out. It is a single short, means that it moves. They try to have it move in the same percentage relationship to the S&P 500. As it goes down, SH goes up. So keep that in mind. You want to know more about inverse funds? We have a great training called Inverse Funds, How to Make Money When Markets Crash. That'll be attached at the end of this video. You can also find it at chartingwealth.com. Let's go back to the weekly chart and go to the Qs. Now go from the S&P 500 to the Qs. That is the NASDAQ 100 down strong for the day, 3.27%. We see the weekly candle still a green up candle, has a long wick on the bottom, a shorter wick on top, and a solid green candle. But we see the derivative oscillator still losing downward momentum, but that price percent oscillator's rolled back over, heading down quite strongly again. All things being equal, the market tends to move in the direction of the largest chart. As we said yesterday and the day before, decidedly down in that way. So we go from the weekly chart to the 2-day. It also has changed direction. It was heading up previously. It's now heading down as far as the price percent oscillator goes. Derivative oscillator still losing downward momentum. Again, we have sort of a red spinning top, a solid red, after 6 days of green up candles. So again, market tends to move in the direction of that largest chart. Remember, the trend is your friend until the end. Most people don't put that in there. You got to remember that last part of that saying. At some point, the down moves will be over, but that may be a long, long time in coming. Those of you who purchased the book or are Patreon supporters, you know what we're now seeing in that quarterly chart, which again is a telltale sign for continued down movement. So that's where we are on the 2-day chart. Let's see what we see as we hone in a little closer to the 4-hour. We've got 2 down candles down in the morning and the afternoon. Price percent oscillator heading down. Derivative oscillator losing upward momentum, waiting for that crossover to pull the trigger on a potential down move on a practice trade on QQQ. And you might say, what's the inverse for QQQ? Several of them. QID, I could go through a little list, but PSQ is the one that tracks percent for percent. It's one of them that tracks percent for percent. The down moves, of course, that you saw in the Qs today is, of course, shown in up moves in PSQ. So that's something you could look to do a practice trade on and just see how that works for you. Okay, we're going from the 4-hour chart on the NASDAQ 100. 2 more charts to review. Next, of course, as always, 20-year bonds. What would you expect bonds to do when stocks are going down? Bonds typically are a safe haven when the market's not doing well. And of course, bonds up for the day 1.14%. We're going into the 9th week of up movement. So again, lots of up movement. Derivative oscillator gaining upward momentum. Price percent oscillator spiking up. That's on the weekly chart. Nice green up candle. Wick, of course, is pushing much higher than that prior wick on the week ending the 21st of December, which is good news for continued movement. We go from the weekly to the 2-day. What do we see there? Latest 2-day candle, big up candle. The last one we saw that big was back on the 2-day candle ending the 20th of December. And again, quite nice. Price percent oscillator spiked up. Derivative oscillators pretty much gone flat, moving sideways, which again is fine. You would expect that with all that up movement. We look at the 4-hour chart. What do we see there? Those of you paying attention, we told you to watch for it. What happened? We had that crossover in the morning after things had reversed. And again, we're going down. Your jumping in point, of course, was in the afternoon at 2 p.m. at noon after that morning candle closed. Hopefully you jumped into a practice trade on 20-year bonds. See if we can capture a little bit more of that up movement. So again, gave you forewarning on that. Hope that you are doing that. And when you do those practice trades, my friends, please make sure that you're using our trade worksheet. Those are available for free in the show notes we put out every day. If you're not a subscriber to chartingwealth.com, please go to the channel or go to the website and subscribe right now. Doesn't cost you anything. Okay, what do we see? Last chart we look at is gold going into its 5th week of up movement. Price percent oscillator moving up quite nicely. Derivative oscillator gaining upward momentum. Nice strong candle. Gold up 0.91% for the day. We look at the 2-day chart. Of course, we see it just moving up, up, up. Let's see, we're going into our 7th. So that is the 7th 2-day candle, 14 days of up movement. Quite nice. Derivative oscillator, price percent oscillator heading up. Lastly, we look at the 4-hour chart. And of course, gold crossed over. Your jumping in point was there in the afternoon, all the way back on the 20th of December, somewhere around, and again, we're hesitant to really call it because we're using Heikin Ashi candlesticks, somewhere around 1860. And again, where did we top today? 2246. That's not bad for about, what, week and a half? Again, with all the market closures for the holidays, pretty beautiful to see. Again, gold is moving. So hopefully you've been doing these practice trades. You've been learning a lot in the fall winter trading zone, the best time of year to be in the market. I know people that don't trade outside the fall winter trading zone. But again, I encourage you to practice with us all the way through the summer doldrums and throughout the year so that you learn everything there is to learn in the market. And again, what does it cost you? Nothing to do these practice trades. Again, you want to support us, buy our book, be a Patreon supporter. Lots of great things we have available for our Patreon supporters. All sorts of special training, special gifts. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.